So I don't like framing it as a market that's going to trade on hope. I like to frame it rather as a market that's trading on an increase in clarity. And I think that the increase in clarity that we're having right now is legitimate. And that's coming from things like the Gilead trial, where we're getting a little bit of clarity. Now we know how many days it might take. Now we know that it might get a faster track approval. We're also seeing these earnings, and at least we have clarity. So when we hear things from Starbucks and other companies, at least it's clarity. And when we see that Starbucks might start to open more stores, that's clarity. So for me, I am fully invested. I have been doing a ton of transitions. I actually think there is a ton of stuff out there that's still cheap, trading at 9 times, 10 times, 12 times earnings. But I'm not trading on hope. I am trading very specifically on the fact that over the past 3 to 4 weeks, I have had significantly increased clarity versus the prior 3 weeks.
Rob Sechan, you're our other top financial advisor on the program today. You've had an opportunity now to go around the table with the investment committee, and John and Jerry, and we'll get to you in a second because I want to talk to you about volatility and what all of this means for the way that you look at the market. But Rob, what would you tell clients today?
Well, Scott, as I said on your Markets in Crisis show last week, I don't love being in the consensus because the consensus is usually wrong. I do think we've seen the lows for the year. There's more volatility to come, unquestionably, but the market's discounting a lot of good news without validation. And while in the short run, I think we're going to focus on some of the narrative as it relates to earnings and economic news, but most of what we're going to focus on is what happens in 2021. And so these pieces of positive news have the ability to draw investors that have been on the sidelines, have this fear of missing out into markets. And it's that delta that matters, and clearly why price performance has been so strong. Now, I'm really happy that, markets are moving higher. Obviously, that's good for everybody that sits around this table. But I am a little concerned that we've come too far too fast. You have the good signs on the news flow front. You have good signs just from a technical perspective in the broadening out the breadth of the market into small caps, into some of the more cyclicals. But somehow I just do not believe that earnings are not going to be impacted in 2021. And if you just look at flat year over year, meaning 19 to 21, even if you had flat earnings of 165, which was the peak, you would be trading at nearly 18 times. And given everything, all the uncertainty that still exists out there, I think you have to pay attention to it.
Yeah.